Hi everyone, it's the boys from Crescent Mortgages here again, coming to you with our FAMQs, frequently asked mortgage questions, and today we're going to be giving you a little bit of information on tracker interest rates. Kai, what is a tracker interest rate?
I'm glad you asked. A tracker interest rate is a type of variable rate, and it is a rate that will fluctuate with the Bank of England base rate. Simply.
Okay. So if the Bank of England base rate goes up, a tracker rate will go up with it. Is that right?
It will track it. It will go up with it. Yeah.
Yeah. And if the Bank of England base rate goes down?
It goes down.
And what if the Bank of England base rate stays the same?
Then nothing happens.
Great. So although it is a variable rate, it may just stay the same moving forwards until the base rate changes. So if the Bank of England base rate stays the same for 18 months, your rate will stay the same for 18 months, even though it is technically a type of variable rate. Usually a tracker is the Bank of England base rate plus point something percent or 1 point something percent. So the Bank of England base rate at the time of filming is
0.1.
0.1%. So a lender may offer you a tracker which is the Bank of England base rate plus 1.5%, which means that your rate currently would be 1.6%. So the base rate plus the additional 1.5%, and then your rate would move with it.
Yeah.
Good.
So why do people pick a tracker? You can go for that one.
Yeah, a few different reasons. You had the easy one, did you?
Yeah, I got the easy one. I got the information.
There's a few different reasons. I mean, one common reason is if someone believes that interest rates are going to reduce, then you may go onto a tracker rate, believing that if the Bank of England base rate goes down, your rate would go down with it, and you would benefit from the new lower rates. That's probably one of the most common reasons. That's more of an economical decision. The reason in terms of someone's actual kind of real life plans are because some tracker schemes give you more flexibility than a fix, because some of them do not tie you in for an initial period. So generally with a fixed rate, you'll be tied in for usually a minimum of 2 years. There are some tracker rates that do not tie you in at all. So if you're thinking of moving house in 6 months, you might put yourself on a tracker rate, and then if you move in 6 months, you can just leave the mortgage behind without paying any early repayment charges.
Yeah, so most of them do, don't they? Most of them don't have repayment charges. As a rule of thumb, I'd probably say more do than don't.
I'd say 50-50.
Yeah.
Yeah. Either way, if you're going for a tracker, for the flexibility, make sure you check, because some lenders will still charge you an early repayment charge. Don't make the assumption that it won't have an early repayment charge. Definitely make those checks before you make any final decisions.
Yeah. So the other one I suppose that comes up ish would be when somebody wants to overpay significantly. So if you're going to come in some money in a year's time, you get a big annual bonus, you want to pay some big lump sums off the mortgage. That's the other one that probably pops up, less common than the other two.
Kind of ties in with the early repayment charges, doesn't it? Ultimately, it just gives you more flexibility to clear your mortgage down if you think you're going to have the funds to do that within the next 2 years.
Yeah.
I think that probably covers it, don't you think, Kai?
It's not a lot more than that.
Pretty simple, to be honest.
I suppose the only real negative against it, other than your ability to budget, which isn't the end of all, is it can go up to any level. So if the Bank of England base rate went crazy and it went up 5%, then your interest rate would do the same, and that could be quite a problem. But it's not that likely. And again, it's the conversation you'd have.
Yeah.
Ultimately with a broker or a bank.
And obviously it depends on the current market. You know, if interest rates look like they may be increasing, and at the time of filming, the Bank of England base rate is very low, so it looks like it may be increasing in the near future. You definitely need to consider that if you do want a tracker, because the chances are when the base rate goes up, your monthly mortgage payment will increase as well.
Is this the bit where we encourage questions?
Any questions on anything we've covered, please leave them in the comments. We will do our best to come back to you.
Yeah, I'd like to know if anyone's had one of those old trackers that they've been on for like 25 years.
Yeah.
The 0.1 above base rate, or I think someone who was on a negative
legacy trackers, yeah. That was if you've been on one of those, it's quite niche though, isn't it? Can we do something broader where people are more likely to comment?
Has anyone nailed it on a tracker?
Yeah. Are you on a tracker? Yeah. Did you find it worked for you? Gave you the flexibility you needed? Or were you stung? Did you take one out before rates went up years ago, and unfortunately you had to increase your mortgage payment? Any feedback in the comments below, and please subscribe to our channel. More videos coming soon. Thank you. I enjoyed that one, Kai.
Yeah.